Well, I guess it's safe to say be prepared for another port in China to mysteriously explode, catch on fire, something of that nature, because every time the Chinese have devalued their currency, that exact thing has happened. Even amidst threats from the U.S. not to devalue your currency, China. So as expected from the Brexit vote, quick look surprised, Monday, 27th of June, 2016, China weakens yuan fixing by most since August, last August that is, of course, as U.S. dollar surges. China responded to a surge in the U.S. dollar by weakening its currency fixing by the most since the aftermath of August's devaluation. And that, my friends, was around the time we saw these mysterious explosions in China, one after the other, like 3 different times. 3 different devaluations, 3 different explosions following each devaluation. Coincidence? I think not. The People's Bank of China set the reference rate 0.9% weaker at 6.6375 per US dollar. A gauge of the greenback strength climbed 1.8% on Friday, the most since 2011, as the UK's vote to exit the European Union ignited turmoil in global financial markets. The victory for Brexit pummeled the pound in high-yielding assets as more than 2.5 trillion US was wiped from global equity values. Now, I also want to talk about, which someone sent me a link to a video where a guy has a little whiteboard and discussed this, and he talks about the Forex market, the currency trading. He talks about pips. And a pip is basically a percent of the asset or dollar value. So if in his example, $1.80 would be 1,800 pips. Okay, and he's talking about how the usual pips, 1 or 2 pips here or there, whatever. But like these paper contracts on the commodities market, these so-called futures contracts where you can play the game 10 to 1, come up with 10%. They give, they lend you the other 90% of the money. So it's as if you own 100% of this asset, which is gold or silver, even though you only came up with 10%. So of course, if the price goes up 10 cents, at least in silver, you just pulled in $500 or so. So, he goes on to talk about a move that took 2 years, which was like $1.70 down to $1.50 or something, like a 20-cent move. And what we recently just saw on Friday, and of course today as well, or it's Monday. I'm doing this Monday evening, and it lost 18 cents. The sterling or whatever after the UK exit, down to 136, and then it was 150 or something, whatever. So he's saying that the problem is this happened in 7 hours, not 2 years. So he's saying, do you have any idea the margin calls, the unbelievable margin calls that are taking place today, actually Monday? Because if you take what he's talking about, and he gave an example of $100,000, you're a trader or whatever, and you've got $100,000 in this thing. He says essentially if it went the other way, you would have made $900,000 off your $100,000 investment. That's what we're talking about. Yeah, baby. But if it goes the other way, you're in the hole, $800,000, and your $100,000 that was in your account's gone. Margin call. And he said, that's just an example of one person with $100,000. He says the problem is these banks, these giant financial institutions, were doing the same thing. They had the odds on TV, 80% chance that it's going to be a Remain vote. Everyone's partying like it's 1999. We're going to make a couple bucks on the way up, and all of a sudden it goes down the other way. So he's saying the amount of margin calls, first of all, the financial institution that lent you the other 90%, which again, that was the 10 to 1 ratio we're talking about. This Forex markets, he says, they leverage it 50 to 1, not 10 to 1, 50 to 1, and even sometimes if you got pristine credit, you're a big shot, 100 to 1. Talk about an unbelievable, massive margin call. So he says, picture, you're this trader, you got 100, maybe you're doing good. You got 200K in there. You started with 100, you got 200 in there. You've been playing it, you are the man. And then this happens, you made the wrong bet. You owe $900,000 minus the 200 it's gone. Now you're down to 700,000. You don't have it. You're going to file for bankruptcy. You're done. After liquidating your 401k and everything else, which would be court ordered should you try to file bankruptcy anyways, maybe you're left with 500k. Still enough to bankrupt out of. Have a nice day. The bank has a $500,000 loss from one person, that's you. Times how many thousands of people? Massive losses. Now taking into effect that, or taking into account that the banks themselves, just like old John Corzine, remember John Corzine, MF Global? He took his allocated account holders' money and gambled with it. Weren't supposed to do that. It's allocated account, can't touch it. Well, no one will know. The digits on their screen will say what their account balance is. They're never going to know. And then he bet, once again, on European debt, by the way. Wrong bet. Instant implosion of MF Global and its account holders' money. So imagine how many of these financial institutions, even the big boys, who were playing that game too, we're going to take some of our clients' money, bet on this, make a couple bucks, and keep it ourselves, of course, only to find out you made the wrong bet again. How many MF Globals are about to take place? I have no idea. I want to throw that out there. So back to the story. There will be further volatility to come. Koon Go, head of Asia Research and Australia and New Zealand Banking Group in Singapore, said before the reference rate was announced. I do not see another round of devaluation. Rather, the yuan is responding to dollar strength. So if there is further strengthening in the dollar, then the yuan will scope to weaken further. The yuan fell 0.12% to 6.6341 per dollar as of 10:06 a.m. in Shanghai on Monday. China foreign exchange trade system prices have shown. It dropped to 6.6414 earlier, the weakest since December 2010. The currency traded in Hong Kong's offshore market plunged 0.37% and was headed for the biggest three-day decline since a run of weaker fixings roiled markets in January. Traders worldwide became obsessed with the yuan fixing in January after a sudden weakening fueled fears of a devaluation and triggered global market turmoil. The yuan's fixing had become more predictable since early February after the People's Bank of China pledged greater transparency and the yuan increasing tracked movements in the dollar against major currencies. China has ample fiscal space to cope with any market turbulence triggered by Britain's decision, but it should limit intervention to alter the yuan's value, according to the head of the Asian Infrastructure Investment Bank. Policymakers should also ensure sufficient liquidity to help manage the fallout while avoiding a buildup of inflation pressures, Lin Likun, the new China-backed development bank's president, said in an interview on Sunday on Bloomberg Television. So once again, China has devalued the currency. Oh, well, it's just because the U.S. dollar went up a little bit. No. All this happened because of Brexit. So one country's going to say, well, it's just because of this little thing, and another country's going to say, well, it's because of that. When it all, end of the day, boils down to Brexit. And what do we have after that? We've got at least, I've heard from 5 to 7 or 8 European nations saying we may want to get out of the EU also. I just discussed the super state. EU wants to go into a super state. Just make everybody one big state that they control and run. And as I said, what do you think that, oh, gee, I wonder how that's going to end for these different state, these separate states. They're going to all say, no, hell, you're not taking this. You're not essentially taking all power from us and becoming one big giant state. No, absolutely not. We don't want that. We're leaving, which will then what? Cause what? More economic and market chaos. This is all planned by design so that by 2018, when the pain is felt everywhere financially, we will be begging to make it stop. And their solution will be new world order currency. Trust us if you want the pain to stop. this is the solution. We're the smartest guys in the room. Trust us. And anybody that says, but hold on, we've been trusting you and you guys caused this massive train wreck of a problem, you might be suicided. Because the webbot did say, once again, and it was correct, the first time it said it a while back, watch for bankster and financial related people to just die off, suicide, etc. And I'm trying to think of what the count was up to when it finally stopped. I think it was in the low 20s of suspicious banker suicides and or deaths or car accidents and jumping off buildings and things of that nature. And most recently, as in about a month ago, the Webbot report, Cliff High himself said, be prepared for 2.0 of that. It's coming. And I just read today, well, actually, I've read this twice now. I read it today and I read it a few days ago. And I can't remember if I even mentioned it then, but I'm going to mention it now in case I didn't. A guy was found suicide. Maybe it was a real suicide, maybe not. Some kind of insider trading scandal. He was set to get in trouble, and they went to go speak with him, whatever, grab him, and he was found dead. That is a prime example of what the Webbot was talking about to look for. So that's number one, as far as I know. And I guarantee you there'll be a 2, 3, 4, 5, 6, 7, 8, 9, 10. There will be a bunch more coming. Webbot nailed it last time, and it was going to nail it this time. Be rest assured. Because as this whole thing in EU, the Brexit, is just getting the party started, it's going to make what happened previously look like a walk in the park. Therefore, as Jill Chalente says, current events form future trends. If last time we had these issues, 20-something of these guys wound up dead, I wonder how bad it'll be this time. How many more are going to all of a sudden be found, again, suicided? Not suicide, they committed suicide. Suicided as in JFK'd, as in Martin Luther King'd, etc. Take care.